Welcome to ForexTV.com's New York Forex Market Buzz. It's Friday, July 17th, 2009. I'm Julie Sinha. In today's headlines, the U.S. Commerce Department revealed that housing starts rose 3.6% to an annual rate of 582K units in June from a revised pace of 562,000 units in the previous month. Canada's composite leading index fell in June as housing, but all the manufacturing components declined. In the Eurozone, recorded trade surplus for the second month in May. And back to the U.S. region, there was weak GE and Bank of America earnings reports, and that seemed to boost the dollar's safe haven status. Joining us on the phone is VP of Trading at Tempus Consulting, Greg Salvaggio, to discuss price action, or rather lack of it, in some markets. Hi, Greg. Thanks for being with us.
Thank you for having me.
So let's start talking about the FX trading that we've been seeing. Would you say it's in ranges for the most part, and that the dollar saw any action based on the data that was out earlier?
It has been ranges really for the last several weeks. Have been defining trade primarily in the euro and the yen, and what we saw was obviously some safe haven buying of the dollar overnight, and that seems to have reversed a little bit this afternoon, as it appears CIT Group is going to obtain some short-term financing from Goldman Sachs. So that's kind of taken this risk argument off the table and has helped push the euro back up to pretty much where we went home last night.
And then what about uncertainty over the outlook for upcoming earnings reports, as well as any good data that could come out that usually is seen as, good data is bad for the dollar and vice versa? What do you expect then next week?
It's our view that we're kind of reaching a nexus in this argument right now as to where the good data is actually going to start to become supportive of the dollar. We were very, very surprised by the strength, by really the decline in the continuing claims data yesterday. Also, today's housing starts and building permits data was surprisingly robust, perhaps showing a bottom forming in the housing market. What we're really going to be looking to is next week's testimony from Fed Chief Bernanke. Really what the market is focusing on is as to whether he is going to signal a timing and an approach to remove a lot of this excessive monetary stimulus that has been floating out there. If he does signal that he will begin to remove some of this stimulus fourth quarter this year, Q1 of next year, we think it could begin the beginning of some long-term dollar strength.
Now, and how about up to the point of those Fed comments? How are traders going to react, particularly in the FX? Are we going to see them on their toes, uncertain? What's going to happen?
Well, I think if the comments indicate a timetable and a leaning by the Fed, I think you're going to start to see some very aggressive dollar buying. Should he be kind of sitting back on the fence and saying they're not quite sure of the timing yet, that will certainly weigh on the dollar. So I think Bernanke's testimony is really going to determine the course for at least the remainder of the summer.
And then what about the expense of higher yielding currencies as this happens? Is there one? You mentioned the euro earlier. What happened with that? I don't know if that would be considered a higher yielding, though.
I don't think the Eurozone, we're looking at that for higher yielding.
Yeah.
I think, you are seeing some of the commodity-based currencies, the Aussie, the Kiwi, to a lesser extent the South African Rand, all appealing on a yield sort of basis. But I think that argument is going to go by the wayside. What we really believe is going to happen is we've seen the dollar really this last quarter, people begin to question its role as the world's reserve currency, which has really pushed it down 6 or 7%. What are the Chinese going to do? What are the Russians going to do? And that's really caused this shift into the euro. Now, we think that the question that's going to emerge the latter part of this summer is, number one, are the plans put forth by the Obama administration to stimulate the U.S. economy, are they working? If they are working, and the way we'll see that out is they'll bear out in the data, we need to see some signs of minimal improvement in the jobs outlook. We need to see some improvement in housing, and we need to see consumer confidence in retail sales bottom, if not start to improve. If that should start to happen, we believe the Fed will indicate a timing of removing stimulus. And by removing stimulus, we're not talking about hiking Fed funds. We think that's next year. We're talking about ending a lot of these extra measures that they have, bond purchases, asset-backed purchases, things like that, ending those programs. We think when the Fed signals that, you're going to begin to see a shift back into the dollar, and we think the two currencies that are going to weaken most against the dollar when that shift happens are the euro and the yen.
Okay, and also you just mentioned China. We had some interesting news from there and the growth in that region. How important is the growth and these reports that we're seeing in these other regions? Because it's not so much that it's new news, but it seems to be hitting the headlines a lot more frequently now.
Well, we think that the China growth story is a little bit exaggerated. It's really what a lot of that GDP growth can be traced directly back to the stimulus plan the Chinese government's put in place. So it's really government-led GDP growth as opposed to domestic-led GDP growth. So we're kind of taking a little bit of that with a grain of salt. However, having said that, we believe the more interesting news released from China this past week was the huge bump up in their foreign exchange reserves. It certainly will lead the market to watch any comments out of Chinese central bank and policymakers about what their intent is to do with those huge reserve holdings. So we think the reserve story is bigger than actually the GDP story.
And Greg, if we could just wrap it up, it definitely seems like this is a tough market for Forex traders to trade right now. Is there anything that we can look for, in addition to what you said, in the short to medium term, especially next week, that spot traders can look to for some guidance?
Well, I think what we have to do is kind of, the hardest thing to do sometimes is step back from the market and watch it and not get caught up in the daily things. We have to remember that the euro's top of its range has been this 41.50 to 41.80 level. We believe that that is probably a good level to short the euro, at least in the short go, to make anywhere from 100 points to 200 points on the pullback. We think that's a good trade to continue at least through next week. And also on the flip side of that, you want to look to be buying euros at levels sub 139.50. So playing the ranges of 139 to 141.50, we think is a good trade to do. It's a trade that unfortunately might pan out over 2 days. If you shorted euros last night, where we went home at 41.50, you had an opportunity to buy them this morning at 40.70. But I think what's most important for spot traders to realize now is there will not be any home run trades. You're going to have to take your 30, 40 pips of profit and book it. But I think there will be opportunities to move in and out of ranges over the next couple of weeks.
Okay, Greg, thank you so much for your time, especially on Friday.
No worries. Take care. Have a great weekend.
That was Greg Salvaggio with his take on FX and price action. And this has been your New York Forex Market Buzz. I'm Julie Sinha. Join us later this afternoon for more news and analysis right here on ForexTV.com.